Everybody's gonna be famous. What we want to talk about? Anybody got some questions?
Yeah, a couple. So this is VIMTF, right?
Yeah, this is for the trading of volatility.
Yeah. Okay. Because obviously I don't have permission for that, so I don't see anything close to this on my chart.
Yeah, you're using the basic indicator, which is IMCF. It's the basic, getting started. So this isn't offered publicly yet. I think you guys already know it's going to be rolled out next month. But I had to take the class, so some of you guys are going to have a better advantage over me. I had to take the class to get the course, to get the use of the indicator. So he's going to start offering it monthly, but I think let's just get back from vacation before he rolls everything out.
So before you shared your screen, you were talking about the black bar, the TNT.
Yep. So the black bar is going to establish either support and resistance, and whenever it turns around, that's when you're going to get a black bar. So you really don't want to trade in between it, because price can go either direction. So being that we closed underneath it, which was a good sign, I took a bearish trade. These are bearish shakeouts here where the red arrows are, and the entry point is actually the next point. So when you see a red arrow on a TNT bar and you see a blue dot entry on the next bar, then that would be an ideal setup to take a trade at that point. You wouldn't want to get in early, because you could get in right here in the middle of the bar and it can go either direction. So the higher probability of it closing underneath it and you taking a breakout trade is better on your side. You know what I mean? You have a higher probability of keeping going. So I didn't take the one back in April. As we know, we didn't take this trade till the middle of May, and then the market tried to fake us out. But still, on the monthly time frame, it was still showing valid for me to stay in my trade, because that's the time frame I chose. It's not really ideal to change time frames once you've taken a trade on a certain time frame, because what you'll end up doing is you'll take a bearish trade on the monthly, and on a lower time frame, something might be looking a little bullish, like on a fake daily, and then you get caught in a bullish trade, and it's actually trending down on a higher time frame. So stick to your time frame that you're on whenever you take a trade, because you'll just confuse the hell out of yourself. You won't know whether you want to go up or down. I stayed in this trade obviously because when I made this trade at the blue dot, we closed below it, and that month closed like that Tuesday when we opened. So but everything leading up to the monthly was all still indicating bearish, which is actually even better. When all time frames line up with each other, that's just more the merrier. So I'll walk it. Let me see. Like Brad. Brad's late. You're late, Brad. So basically the rule is, once you've made an entry at the blue dot, as long as you close below it and you're in profit, even though we wasn't an options trade, that's a little different. If you're spot trading, this is what you're supposed to be going by. We're using our expiration as our stop, as you know. This is why I stress use them expirations as your stop loss and limit your risk, because the trade can go either way the whole time of your trade. Everybody knows we was down 40-50% in the first week because the market faked us out, right? If we would have all let go of them puts, try to go bullish, we went back down again this week. Y'all would have been mad as hell. We tried to get a bullish trade, and then we're still actually going down. So this is the reason why I tell y'all, if you're taking a trade on time frame, stay on that time frame and manage it that way. That's what Manesh would want you to do. Once you've taken a trade on time frame, you don't ever move from it until that's done. So leading up to the monthly, we'll go down to the weekly. This was a low probability setup, but there still is a target. It doesn't mean it's valid to take. We're not even taking the weekly, so I don't worry about this. The shade was red until this week because we had a little bit of movement up and down. So it's kind of an undecided state right now. Switching to the 3-day.
Yeah. Going down.
Hey, OPSEC. Sorry, I just saw your notification to join. still low probability, but look back when we first took this trade, we pretty much entered at the blue dot. We was in an option trade. It was still looking good for us to get to our target. It tried to get there, but that market faked us out on the 25th.
Now, what is that black dot in the middle of them?
What black dot? This is the V close. So as long as you're closing underneath it, it's a valid bar. I'm trying to see. Once you're in a trade, you use these V closes to manage your trade and move your stop sometimes. When you're closing above them, you want to start to tighten up your stop because there could be a gain in the chart. I'll get to that later.
Okay.
Let's switch to the daily. We was all looking good back in the beginning. It was a low probability setup on the daily, but we pretty much got to the target on the daily. And then on the 25th, everybody got scared when we had that big ass pump. Y'all remember that?
Oh, I remember that.
Garbage.
I think everybody went 40% negative that day, at least. So it kind of turned around right there where we entered anyways and kept on going down. And the 4 hour pretty much showing the same thing. It wasn't valid for me to take on the 4 hour the day I took it, which was the 16th. But I was trading a monthly, so 2 hour. Oh, so let me go over the red shade in the background of the setup is what validates the trade. If you're in a red shade, it's obviously a bearish trade. If you're in a green, that's a bullish trade. If you're in a white shade, it means you shouldn't be in a trade at all in that time frame. This would probably help you choose your trades a little easier, Cole. Like if you're in a bullish trade and you got a red shade, the market's kind of going against you, right?
Yep.
Let's switch down to the 1 hour.
I thought Manesh said on the IMTF basically the shade is your entry. So this is the time you should be entering the trade. Obviously, it's I misinterpreted that.
For the IMTF indicator, yes, but the VIMTF, this is more the validation side of the trade.
Okay.
Yeah. There's several 1 hour targets, but this is what it was doing on Friday. It just kept going down. Let me turn off my forecast so you can see it better. So you see when the shade is red, this is indicating a bullet bearish trade right here at the blue dot. You're not supposed to take the trade until the blue dot, because what can end up happening is you can bounce off that support right there and you can go the other direction. You want to try to keep you out of these sideways games. See all the sideways? So if there's no shade, you'd be just sitting there and your account just going up and down 1% or more. Just kind of messing with you. But you don't really want to be on something unless it's shaded in your direction. So on this
Raleigh, hey Raleigh,
yeah.
You talk about those blue dots, and then you see the blue dots in the white shaded area. So what was that saying then? Was that because you're saying the entry is going to be on the blue dot?
It's giving you an entry point, but to validate you really wanting to take the trade, you got to make sure your shade is the same color you're trying to go.
All right, because just a little further to the backwards. Yeah, I saw the blue dots right there. Yeah, there you go.
Okay, so there's no red shade here.
Right.
No shade, no trade.
High probability,
No shade, no trade. Oh, trademark that.
Yeah.
Yeah.
That's what Manesh says, man. So that's all his saying right there. But yeah, you wouldn't have taken that trade. So this would have kept you out of that sideways movement. This is more of a management style. It's not a signal indicator. It's more of a management system. Once you get in a trade, you're supposed to manage it. If you want to sit here and wait on the setup to go, opposite of you, it's your fault you didn't get out of the stop like he suggested. If he gives you a stop, you're supposed to follow the stop and use it. assuming you're you're not option trading, you're spot trading, right? If you're buying the stock, you should be getting out of that red dot if it ever comes back and hits it. But, like in our case, I teach y'all to hold on to your options, just use your expiration, limit of risk. You don't have, we can go down negative 40%, we can go up 200% tomorrow. So just don't be throwing your whole account at an option trade, expecting it to go your way just because the indicator says. You don't know what the indicator is going to do. The indicator can tell you a bullish trade tomorrow and the market fakes us out, and then you'll be out of your money, especially when the market tanks again on Friday like it did this week. So this is more of a management system is all it is. Once you get in and you follow the rules, after you there's only like 6 solid rules you got to go by. You got a blue dot entry. You're not supposed to make an entry until you get to your blue dot. You got a red shade. You wouldn't take a bullish trade in this shade. You would only take bearish trades. And conditions leading up to your entry have to be valid as well. You got to have like a higher probability of either a yellow bar, purple bar, or something like that. You can't just, let me give you an example. A gray bar, for example. A gray bar would be something you wouldn't want to take. This is like an invalid trade, even though it's giving you a target. It's really not ideal to take. If you go back and look in the charts, you see all these gray bars that didn't really do anything afterwards. You see these gray bars here?
Yeah.
Yeah, they just kind of played around and price went sideways. This one, it already moved too fast. You would have avoided this. You would have said, oh, we're going down. I'm gonna buy some more puts. You got lucky, but it wasn't really in the cards for it to go down.
You would have bought, so right there, you see the gray one, and then it goes to the black one, right?
Yeah.
Yeah. So that's the indicator when it closed down the next red bar there. You got the blue dot. That's where you got in then. Is that right?
There's no red arrow, so that would have.
Okay. Okay, my bad. Yeah, red arrow. Red arrow, Derek. God dang it.
Well, actually, I went back in the chart some. That red arrow should be there, but a certain amount of bars back, my Nash turns off a lot of stuff to speed up an indicator. So there's probably a red arrow there when it was there. So see, once we go back, you don't see any red or green arrows. So he turns some of this stuff off because these indicators get pretty laggy. I don't know if you notice, Cole, when you turn on the indicator, it takes a minute to.
Yeah.
Same thing. It's just he's eliminated them so far back once you've done some back testing. But what I could do is I can just hit the replay button and go back some. But then again, his indicators mess up on the replay. But you see the red arrow now?
Yeah.
Yeah, so they told you to take that trade there. But this is something you guys would want to look into if you're trading stocks. I mean, it's still going to give you a general indication of the direction of where price is going, no matter what you're trading on any time frame. But this, like I said, this is not a signal indicator. It's basically a management system. Once you know how to manage your trade, you're going to stay out of the games that he's trying to indicate that is on the chart. You wouldn't have taken any of this if you would have been trading hourly.
Right.
Just avoiding all the games. You remember all that time we sat down and we waited? Look, see all the time we've been waiting on our profit?
Oh, yeah.
People would have been trading that in a white shade. They wouldn't have really got anywhere. But now I think some of you guys are 25 and 35% in profit this week, at least on some of them.
They're like 150.
150?
Yeah, on Friday.
Oh, you made 150% on Best Buy alone?
Yeah.
Okay, so you got in.
I was talking to you on Friday, and I bought. Yeah, it was a gnarly day.
Yeah, well, you lucky bastard, because I only got like 42% so far.
Yeah.
Because I sat at all the games. You got in a little after we did because this pump happened, and then you got in and it went your way.
Yeah, I was up over 100 too. Because I got in later. I got in some later too after that pump.
Yeah. Well, I try to average in, but you know, I done closed and opened since, I think 2 or 3 times since you guys got in, remember? So collectively, I might have gotten more than 42%. I'm just not counting it. I'm just focusing on trying to get the next dollar. But everything was looking good on Friday, so hopefully it continues tomorrow. We'll see.